Good morning and welcome to the Fiduciary Friday Retirement Recap with Alpha Pension Group. With me is Mark Salamone, our lead consultant, and Rob Milas, our Chief Investment Officer. Today is obviously September 11th. A word on that in a moment. There's also something else going on today, which we're probably the only people celebrating, which is the national celebration of 401k Day at Alpha Pension Group. So in normal times, non-COVID times, we normally hire a bunch of food trucks, drive them around to different communities and give away free lunch. Obviously, this year we're not doing that. But first to September 11th. It's amazing that it's been 19 years, one of the saddest days I know in my life. I think of September 11th often. I also think about where I was and how lucky I am and not to take anything for granted. So, Rob, I know this is a tough transition to you right now, but I know you also are going to speak about September 11th.
Yeah, so normally I have dogs on my slides, but today I have my trusty assistant with me, protecting me. As you said, Rich, though, obviously thoughts go out here on the September 11th on this date. I think of those victims as well as those heroes who stepped in to help. On the investment side of the house, September has come and we've gotten about a 10% correction on the large cap side of the house. And a lot of that has been those hot stocks in technology, which have retraced a little bit. What we're also seeing is a lot of issuance in the marketplace in terms of new IPOs on the equity side, which is very interesting. We're also seeing treasuries continue to rally and be at extremely low levels. So we're seeing the 10-year at 0.68% as of last night, and the 30-year at 1.43%. Again, very, very low. Not quite historic lows, but again, remain low. And, just in terms of, I'm showing some retail bankruptcies. Unfortunately, retail and travel and leisure continuing to get hit very hard, both from a corporate perspective, but also, more importantly in my mind, from a worker standpoint of view and employment standpoint of view. So thinking of those folks as well. So that's where we are, Rich.
Thanks, Rob. And Mark, I apologize in advance. Rob is always a hard act to follow, but today, unless you're about to shear an alpaca on camera, you have a tough job to do. But I know you're going to talk about some clarity about the IRS, some resources about the Secure Act that they have. And Roth IRAs. So take it away.
Yeah, thanks, Rich. So we have, two topics for today's Fiduciary Friday. One being related to the Secure Act. The Secure Act was a piece of legislation that was passed right at the end of the year last year, and I think got overshadowed, obviously, by everything that's occurred this year. But that legislation is pretty significant, and there's now I think, handy Q&A that's listed on the IRS website. It goes over everything from the tax credits you can get from opening a retirement plan to the expanded options, whether it's liquidity if you have a baby or adopt a child. And a lot of the Secure Act really goes into effect this year and in the future years as well. And lastly, the last piece of my part of Fiduciary Friday is there was a recent survey that showed that a lot of plan sponsors have seen an uptick in employees using Roth. Roth was introduced to 401k back in 2001. And really the two driving questions that are driving participants to use Roth are, will tax rates increase in the future? Pretty good question, given everything going on right now. And will participants be living in less of a tax bracket than they are today? For those familiar with Roth, Roth is the inverse of traditional 401k, where with traditional 401k, you get a pre-tax deduction. The money grows, hopefully, over time. And when you take it out, you pay your taxes. That's the inverse with Roth. So it's two interesting things that plan sponsors and participants are seeing. And we'll see if that trend continues in the future.
Mark, great stuff. And some more trends for you, given that it's 401k Day here, National 401k Day. So we do celebrate that at Alpha Pension Group. You probably have seen, if you're following us on LinkedIn or Twitter, some good information that we've been sending out all week. We hope to have a real celebration next year and do something pretty cool. We know it's sort of geeky and nerdy to do that, but it's all about creating awareness. There's $6.4 trillion in 401k plans. $3.7 trillion in that 401k number has been in the last 10, 11 years. Since 2009, we've had $3.7 trillion of growth. And 55% of all 401k plans are $1 million or less, which is good because that means more companies have started 401k plans. The thing that bothers me about that is that $10 million plans usually get better services, lower fees than the smaller plans. That's something that we work really hard to correct at Alpha Pension Group. 43% of all workers participate in a 401k plan. Again, that's something we're working hard to increase. That's not nearly as much. 11% is the average deferral and match rate. So the actual savings rate between match and deferral is about 11%. That is actually really good and an emerging trend that we love to see, up big time from where it was just 10 years ago. And 24% of all assets are in target date funds. That's another great statistic. So about a quarter of all assets are in some sort of glide path. Now, you need to make sure that your consultant is looking at the actual target date fund family to make sure it's the appropriate fund for your plan. But the fact that 24% is in some sort of asset allocation and glide path model is great. So I'm sure you have big plans for this weekend, but raise a toast to National 401k Day. I know that we're doing that here at Alpha Pension Group. Thanks for joining us. People and pets are welcome here at Alpha. So we'll see you next week. Thanks so much.